Welcome to another episode of Beyond the Mortgage. I'm Tracy Valco and your host. I'm very excited today because I have a dear friend of mine, JP Boutros, that's with us today. He is a communication specialist that helps bring companies and people together with government. And JP, I met you many years ago, I feel like a lifetime ago, when I was on the board with Mortgage Professionals Canada, and you are the GR, so the Government Relation Director with the board. And we just connected. And there was so much synergy and alignment to a lot of our conversations. And I know you did so much for that board and our industry as well. You've got a vast knowledge and experience in the government and what's going on economically in Canada and the world, but you also have a lot of passion for other initiatives as well. I'm so grateful to have you here today. We've got a lot to dive into this episode, but just thank you so much for being here.
Thank you for having me, Tracy.
So let's talk about how we got to this point with you and your history, because I only touched on a few things, right, of where you came from, but I want you to say it in your own words about your experience and just life in general.
Let's just say it was unorthodox. I started off born in Toronto, took a chance and took some scholarship money and fled to Formula One auto racing in order to try to get into the paddock and meet people that I loved, namely race car drivers at the time. One particular man was named Ayrton Senna. Snuck my way in and got in at the right time because it became a very closed society after that, and made a pretty decent living out of it between the late 90s and just around the time the economic collapse in 2008. Around 2010, I just had my reasons to be back home and stayed home. It took care of our son, wife, and I, but then ended up somehow at Toronto City Hall working when a gentleman named Rob Ford was mayor of the city of Toronto. In that time, I got to basically see how sausages were made at the municipal level in the city of Toronto. And it was also at a very interesting time because Twitter had just started becoming a thing. I was an early adopter of that. And my boss, who was the chair of the Toronto Transit Commission, we just designed something to make sure that our messaging got out in a way that was, at that point, new, which was go directly to the people to get your message through. And then we found a way to market what good things were happening in the city and in transit, and obviously understand what criticism there were of those things. And that became an interesting way of understanding what communications was, because obviously there was a lot of tumult in the city of Toronto at that point. Then it basically was a precursor to everything that Donald Trump was doing in the States come 2015, 2016. Everything that was in that playbook was stuff that we understood and learned about at the City of Toronto level. The media attention, how to stand it, how to perhaps even play with it. But it wasn't done with nefarious means. It was really just trying to understand there was so much noise everywhere. How do we filter it down and make sure that it comes to be? On the government side, it was always about trying to ensure that you had 23 votes on your side because it was a council of 45, learning how to find compromise in very interesting situations on a variety of votes that had real ramifications for the city, and also learning how to deal with other levels of government and understanding what their needs were. So taking that together, it just became a very interesting cauldron to learn about how to deal with government on the not-for-profit basis. I ended up, in the intervening years, I was doing consulting, but I ended up with MPC in 2018 because of a fine gentleman named Paul Taylor. I don't work for pay, I work for fit. And it was a fit that really worked well from the start. He had trust in me. We all trusted each other in that office. So it was a very tight group of people. And we were able to elevate MPC at that point to be more on par with the Canadian Real Estate Association, Canadian Home Builders Association. That was all by design. And it worked out quite well because mortgage brokering, as you know, it's still very young, relatively speaking. When you compare insurance associations, which are 125 years old, MPC is, I think, 1996, 1997. It's new. It needs to professionalize itself, and it is growing quite well now. But it comes down to people like yourself. And it was interesting, the reason that we got on well together and several other people when we were doing our GR it worked because you could tell the people who truly were in it for the greater good. And we had to elevate that as something for the profession. And I believe we did that. Of course, we've had COVID in the intervening time.
Lots of changes.
We've had inflation is transitory. We've had all kinds of things that are happening now. And that comes down to messaging and understanding what is going on in the world. But in terms of my story, it is about trying to make good people better. And it is trying to ensure that the right message gets out generally for the greater good. That's a personal thing. I try to get behind things that help the greatest number of people.
I love what you said because it's not about the money, it's about the fit. And the alignment of making it better for the greater good is, I think that's why you and I were so aligned when I met you on the board. And just for the listeners, because a lot of people wouldn't know what MPC is. So it's Mortgage Professionals Canada, which is an association I think there's over 14,000 members now, maybe even more across the country. So it's lenders, brokers, insurers, banks, and it's about fair policies and practices for fair home ownership and rules. And it's to get our voice heard because, like you said, the broker space is younger than what some of the traditional companies that are out there. When I was very grateful to be on the board for the 3 years that I was in alignment to when you were on with MPC as well, we really did see the impact of a lot of us that were truly passionate about the industry and really bringing education and integrity and moving the needle to make sure that we had fair policies of home ownership. So proud moments for, I'm sure, you and myself, but more in gratitude of our relationship and friendship that we fostered through that. And I appreciate you telling about your story because it's interesting to me when I first met you because you were in that world of automobiles and then turn into government. I'm not sure what that transition and how that worked, but everything that you have dived into, it's all with passion and purpose. And I can see that even now going through where you're at now, wanting to make a difference for so many people.
About relationships, about people. Anything that ensures that a diverse set of views is understood and can come behind a common theme is what it's all about. You speak about MPC and members are very disparate in their needs. They're all competitors with each other. How the heck do you make them all sing from the same songbook? It's hard, but you tend to find messaging and needs that people can coalesce around, and we did that pretty well, including 30-year AM on, especially for first-time home buyers.
It's a big deal.
And any messaging around stress tests that was just completely punitive to people at times, but also making sure that people don't just get to a point where they need to have moral hazard issues where they just overextend themselves. And that comes from proper education and people understanding maybe you shouldn't be doing the things you're doing.
And it's also alignment with when I was on the board. Remember, we're volunteers, right? So we're volunteering our time even over and above what our full-time profession is as a mortgage broker or, a lender that's on there. And so all of you that were part of the staff of Mortgage Professionals Canada had to continue to align to a change of directors and boards. And that takes time and a lot of standing of relationships with people, understanding people's personalities to be able to align it so that in a short period of time we can move the needle on so many initiatives. And I was really in awe of all of you at that time as well, being able to align us so well so that we said we all walked the same line, right? To make it the greater good for people and push the advocacy on 30-year amortizations, talking about the stress tests. And those changes, some of them didn't come at the time when you and I were in the board, but we see it now, and a lot of that is the hard work of all of us that were on there. So proud moments when we see changes, right, to help move the needle and help continue fair home ownership. And that's why I got into the broker space 26 years ago, was to allow people the opportunities, choices, provide education so that first-time home buyers had the opportunity when it was able to suit their needs to buy a house and not be challenged. And I think that looking at the landscape now, I've said this in my last podcast, it's heartbreaking to some extent for me because I see some of those challenges restricted. When I first got into that broker space, first-time homebuyers were around that 24, 26 age group, and now we're looking, I think the average first-time homebuyer is 36 years old.
But equally, it's also one of the things that you're talking about there. I am concerned about new people in the industry and where they're learning from.
Absolutely.
The industry, when you're in it, you've put this effort, relatively speaking, to get into the level 1, level 2 potentially. What are the bright, shiny objects they're attracted to as opposed to trying to learn from people like yourselves who have been there through the good times and bad and can advise and instruct? And that's where people like you should be continuing to be on the board and being allowed to help mold the new generation of mortgage brokers, because just much as there are changes in who the new homeowner is, there have definitely been changes in who the new mortgage brokers are. And that's something that concerns me perhaps pretty much equally to the concern of who the new home buyer is. And in truth, it's also about existing homeowners now. Your model, I'm not sure how much it's changed over the past couple of years.
Mm-hmm.
I'm sure that all the hopes of new homeowners, because now they're 34, 36, your book is probably much more focused on existing homeowners and making sure they...
What's their exit plan? Yeah.
Yeah, what's the exit plan?
Exactly.
Especially because they now need exit plans in ways perhaps that they didn't before. So as much as I'm interested in perhaps sharing opinions on a whole bunch of things, I really want to learn about how the heck you keep it together. How you dealing with it was one thing between 2015 and 2019, early 2020, and then you had the weird stuff around 2021 on what to deal with. But it's got to be different now.
Oh, it is.
It's not meant to be negative. It's trying to understand how do you have those conversations? What advice can you give people? That's the thing that just astounds me, because you're basically acting as a counselor, financial advisor, everything else, people who are having really interesting times right now. So I'm trying to be positive. I'm trying to understand how you do it and hope that other people learn from it.
No, great question. And I think I reflect while you're saying that, because I think that we've always been in that space of being counselors and advocates and providing education and not just providing a mortgage product, but there's so much more to that, and being a confidant for a lot of individuals and families so that they feel that they've got a safe place to talk about money, because that's where it hasn't been and it still is not. People are judged so much by what they have in their bank account, not their heart. And I think for me, why I've been able to stay in this industry so long is because my drive is about the heart. I truly care about people. I care about people's well-being, whether you've got $1 or $1 million in your bank account. I want to make sure that you're given the proper advice and know that you've got someone that's always behind you. And especially in times of change where we seem to have change, it's always there, but it's been so constant over the last 5 years. So I think for me, I'm even more fierce on it to make sure, like you said, we're in an industry where a lot of people have gotten into this industry, like many other industries, that not necessarily should. And I was just on a meeting this morning because I'll be on a panel with the Canadian Alternative Mortgage Association in May. And we were talking about, with alternative mix and private lenders, how they're just getting the same deal from 4 or 5 different brokers in a different story, and not like it's not even a full package of documentation, or these lenders are having to vet through extra due diligence because the agent and broker isn't sending in properly, or shouldn't have even sent in the deal at all because the client shouldn't be in that position. And that's what we got to fight for, is, having that. I'm never going to be perfect on it. I don't think any industry will be. But somehow I think it's taken a couple steps back during a time when we were having an abundance of activity in the real estate market, and people were just getting in at the drop of a hat and shouldn't have been in our industry, and not enough regulation on those people. So to your point, I think I love people. You do too. I know you do. You always want to make impact, and you want to make sure that you're providing as much collaboration and communication to people so that they can be interconnected with the government to maybe move initiatives forward. To me, is why we're aligned so well. But I think right now, more than ever, it's about education and making sure people are heard or hearing the right things. So let's talk about tariffs. That is the word, I think, for 2025. I think last year was inflation. We can go, before that, we were talking about COVID. But, break down tariffs, and I want to hear it from your perspective. I could probably spend the whole episode on this. I don't think that's a healthy place to be, but I do think, because we just recently went through Liberation Day, Trump, and then I've heard some commentary today about it being Obliteration Day. There's so much noise, and we talked about this before the start of the episode. People are over-inundated with media. I think they're overstimulated. Even us as professionals get overstimulated on how to be able to navigate these waters of unknown territory. And I just want to hear it from your words about what your thoughts on, because I know you're so seasoned with this.
So we've had these conversations once or twice before. I think and I hate using the words "I think" because it just sort of presumes too many things, and too many conversations have badly started with "I think." So I will go with this. We have to start thinking when people think about what's going on in the world, they really got to shrink it down. It's about their world.
Yeah.
And if you start thinking about everything that's going on in the periphery, why something in California is relevant to what's going on in downtown Waterloo, when perhaps the homeless person down the street is probably of a more relevant issue than what's going on in California, but they all take up the same space in one's mind. That's the big problem. We need to shrink everything down. The one over our big theme right now is tariffs. At least we're all facing them together. Anyone who's got an RRSP, anyone who's got a retirement fund, anyone who's got a piece of property right now, you can literally look at it and say it's everything across the board. And we're taping this on April the 4th, 2 days after this obliteration day. Everything's 5 to 8% less than it was a few days ago, whether it's because of the Canadian foreign exchange relative to other currencies, whether it's just the value of everything going down, the need for stimulus, everything. We are all 5 to 8% poorer than we were 3 days ago.
Yeah.
You start with that. How many days, weeks, months of work is it to get that back? Assuming that it all just comes back. It won't come back that way because the United States has just decided to create a goods tax. Where we have a GST, they've decided to create a goods tax in the form of everything that comes in, you're taxing it at a minimum 10%. Some things are obscenely more expensive. It is an arbitrary thing because they need to pay bills. And this seems like the most elegant solution without creating something called a goods or services tax the way we have here, which is based on consumption. As a result, because they are a $26 trillion economy or whatever it is, probably like 35 trillion Canadian, you convert it, you have them applying a tax on themselves, not knowing what the ramifications are. They have destabilized everything everywhere pretty much just like that. And we have to navigate that. As a collective, it is safe to say this is COVID at least. We are going to see whoever ends up being prime minister is going to have to bring everybody together, say, we're going to have to spend a bit more to help people, but they're going to be more judicious about it perhaps than they were the last time around, we hope. But it's needed because everybody's going to be suffering equally. Their job's going to be lost. You can't just, serve the big deal. All we can hope for right now is just try to blank out the noise, make sure that you make yourselves as fiscally prudent as possible, keep everything local. I mean, I see around here, just to Niagara a few days ago, and it was a lot busier than I expected. Well, I surmise we weren't flying down to Florida or Vegas or anything like that. I mean, I get a lot of vacations to the United States as a protest. The way of saying we're all in it together, everyone's suffering, be a little nicer to everybody else, you're all going through it together. And, things like this bring people together. It's just a matter of ensuring that, we don't have to come 2-3 years from now on how to exit the issue. It's so big.
It's so big. Yeah.
I mean, it hits everybody. The Gen Zs, it hits, the kids, it hits the adults. And, they've gone through enough. I think everyone's
through enough. Yeah.
It's just, I think, this betrayal, the fact that it is something that is inexplicably stupid, is the real all of this, because everything that we presumed and assumed is out the window. And there's a lot of recalibration. Where are places in the world and where are places, amongst each other? We're having a better understanding of Canadians and what we can do within each other. Interprovincial trade is going to be hopefully improved because that should have been done a long time ago. There were many things that should have been done right years ago, but you had a lot of dogma driving policy at times. The dogma would drive policy irrespective of who was in power, but we need to have a little more lucid understanding and professionalism in what's going forward, and hopefully that's going to be agreed upon in the coming weeks.
Do you think that this is going to be interesting, I think, with the government? Like what you said, a lot of the provincial trade barriers that we have should have never even been there in the first place. And it's almost like a kick in the butt, right, for our country to say, okay, we need to do it's today. It's like they should have seen 10 years ago, right? Not just today, but that's where we're at. Where do you see this in 12 months from now? Do you think as a country, and I'm just talking Canada, let's not talk about globally, just Canada.
Canada. We will be different. I genuinely think it'll be for the better in terms of a foundation for the long term. It's just that we have relied so much on being a consumer economy and relied so much on supplying one particular partner that it's going to take a while to recalibrate. But the foundations will be stronger next time around.
Yeah.
I truly believe that. It takes a crisis normally to do this. COVID was one of those things that didn't do things in terms of recalibrating societally because there were so many fission points, there were so many issues. This is everybody's getting hit together at the same time. It's making us think differently about money. It is amazing how money seems to move people a little more differently than health does because not everyone gets sick at the same time. But if everyone's getting financially sick at the same time,
it's not good.
They tend to think a little differently
Exactly.
and recalibrate. And governments tend to understand that. It's just a matter of making sure the policy is sound when they try to do these things. And, it's trying to fit. You're trying to make sure everybody is happy. And that's perhaps the problem. It's this incrementalism. But when you have a real crisis, it tends to work out a lot better in terms of refocusing and putting down new foundations. This is off on a tangent a bit, but one of the things I've been in Japan 4 times in the last 3 years, and I've just fallen in love with it. My kid went to school there, so I just became enamored with it post-COVID. And one of the things that you find there is that you have transit that really works, clean as can be. Everything is just pristine. Yes, they're relatively speaking, you would cry. Tokyo is a city of people. That's the entire population of Canada in one city. And it works. It works. As a Japan Rail worker for being a few seconds late, let alone a few minutes late on a train. And I surmise that it was because the whole country was obliterated in 1945 and they had to start again. And they started again with an entire ethos that said, we got to be in this together. It's philosophically what it is. It's lasted 70, 60 some odd years. Yes, there are issues. There's, you've had your problems. You've had your problems with bubble economy back in the 90s. But by and large, societally, it has worked rather well. This is the kind of thing here in Canada where you have a country of 10 million square kilometers, over 40 million people, where you really could be just a city. You got to worry about everybody else. But you need moments like this where you realize who your friends are. This should be your neighbors, not the people down to the south or anywhere else.
Exactly.
This could be that moment when you have adults leading a next generation of people instead of having a blowhard dictate how things should be. I think the nicer, gentler way of doing things, being better to each other and working together, it could be that moment. I can't think of other moments that aren't more cataclysmic for people to be formative moments for our country. So the short answer is I think it's going to be better in 12 months. I think more like 18 months. But there's going to be a little pain in the way, but we didn't do it, so it makes it a little easier.
It's interesting. I listened to a CEO from automobile sector in the States say that he feels that Trump has to see everything actually collapse before he'll actually revert some of what he's implemented on tariffs. Do you think that that is potentially what's going to happen in some sectors? Do you think that he will revert some of his tariff initiatives or reduce them in future? Because when listening to so many companies out there talk about the impact of tariffs and how we're so interconnected with countries, not only Canada and the U.S., but Mexico, and to make a car isn't just a couple of pieces here and like so many just for like the root of a vehicle to the front. It's decades of being able to build up these partnerships, so you can't just dismantle it in an announcement. It's going to take a long time. Do you think potentially that could happen in some industries where we could see him reversing some of his announcements?
Think about how that announcement came out. You had auto workers introducing them.
Yes. Yeah.
Hard hat and,
Yeah.
protective and a security visible vest.
Yeah.
The is that people feel pain and start to get pissed off. That's when potentially he's going to move. He has absolute impunity between now and the midterms to pretty much do what he wants and feels. We're not going to make him change his mind. He's already proved that he doesn't care about the shareholder class who have lost 7 and 8% of their values over 2 days. He cares about the people who pledge fealty to him. It's not loyalty, it's fealty. It's a very different thing. And if those people start to get and say he's doing wrong, and he hears that on Fox or he hears it on Newsmax or wherever he gets his news, that's going to be the thing to him. But ego will not allow him to say that he was wrong. So you have to give a person like that an exit ramp. So there's 2 ways to do it. Financially and economically, he should be doing it. Politically, he's going to have until he gets real pushback from Congress, and it won't happen right away. I would say no. But when it comes to the crackerjack philosophy and psychology of it, I can't see it happening anytime quickly because there's no reason to. He only cares about what happens at, Trump Doral or Mar-a-Lago and whatever in his particular world. Very few sensible people decide to create a multi-front attack on the entire world. Just one of those things. I mean, Napoleon and Hitler had two fronts that cost them their wars. This guy's decided to take on the entire world at once. He has as much issue with China as he does with us. He tariffed Israel more than Iran. There's much to say. There is no sensibility. It is an arbitrary thing to prove that he can do it. And when you're dealing with someone like that, sometimes the simplest answer is the one. And the simplest answer is he's going to do it until he feels like he doesn't want to. That's the way I look at it. And we just got to work around it.
Yeah, and it's interesting. Like today I heard going back with reciprocal tariffs of 34%. Do you think that this is going to be something that we're going to continuously hear about, countries going back and doing reciprocal tariffs, and then this escalate back and forth like a ping pong match until it gets to a point of absolute ridiculousness?
No, there are many trade wars in the past that have turned into hot wars.
Yeah.
The problem is that he's decided to fight everybody at once. And, and it could be feels like he's, the Queen's real estate broker or estate magnate.
Yeah.
For a man who thinks he hits a home run at life but was born sliding into home, it's a very different, mentality. He doesn't know any better, care to know any better. This is, it's going to be a bit, but when you talk about China, when you talk about everybody else, all Canada has to do is manage its relationship with the United States as best as possible. And learn to work with more people than that. Get that Trans-Canada pipeline. Get those things that get us moving. Do LNG. Anything that really, understandably perhaps, dogmatically weren't done between 2015 and 2024, those things are now on the table again. And pragmatically, things need to change. We have an interesting, difficult relationship with China, but it all of a sudden seems a little safer to go into China than it does into the United States these
It does,
days.
doesn't it? Absolutely.
I mean, people getting passport, and they're from the States. We have to recalibrate collectively.
Yeah. I think we have to take a step back in the U.S. right now and let them try to recalibrate what their new norm is going to look like. Just on one note about the U.S., one thing thinking about when they were talking about bringing, we'll talk about the automobile sector because it is a big industry that's impacted. He talks about bringing that all, like you said, the union member that had on there speaking the other day when he was announcing it on Liberation Day. There's buildings they said that were sitting that were, thriving automobile sectors years ago, and they want that back. Well, to bring that back takes time. It's not next month thing. It's not a year. And then how are you bringing them back with technology? You're not going to necessarily bring all these people back. Technology has changed, and technology has replaced people. So this is where it's interesting. I mean, there's so much to talk about, but to your point, he's very much about putting the cart before the horse and not actually what's the build out of all that you want to bring. You want to be a more thriving, economically more dependent, internally in the U.S., but how are you that with the new world we're in with AI?
There is no horse for that cart.
Yeah, it's very true.
There isn't. And the room thing, everything that is mentioned here, forget about it. It is who in the UAW or the Teamsters is going to be happy getting paid $45,000 a year or $35,000 a year to match the cost in Vietnam, building something in China, building, anywhere else. You can't go bringing up wages, decreasing revenues at the same time.
Yeah, it doesn't work.
It doesn't work.
Yeah.
It just doesn't. It just can't work. It is completely understandable why the heartland of these ticked off in general. But when you are trying to do the kind of surgery he says, he described it yesterday in some interesting alliteration, you get the head off. You do have to try to manage it. And exact opposite of a Carnegie thing where you try to win friends and influence people. He's doing the diametric opposite. He's losing friends and dissuading people. That's not going to help the United States of America. It didn't back, with McKinley. It's not going to happen now. And we're talking about basically just a few years after the cotton gin was trying to apply. He's trying to apply tariffs and methodology for the current day. When 130 days ago, we were barely starting to use AI,
Exactly.
create things.
I know.
He is It is a completely way of doing things. And talk about,
I know,
we
on
can
and
talk
on
about
about it,
everything, and simply it is an unreasonable person that the world has to deal with for the next 3.5 years for his own particular reasons and needs.
And I think you just said like 3.5 years. So we have to think about, like, there is the analogy that tariffs are here for a long period of time. But again, we're looking at 3.5 years that he's in as president. Things can change and recalibrate at that point. So, 3.5 years is still long, but it's interesting. I was reading one of a financial planner that I listen to says that actually where we were at this week with the announcement compared to when we had the announcement of COVID, it was actually worse during COVID than now. And the markets do eventually recalibrate and balance. So don't pull out of all investments right now. Take a deep breath and realize worse off back when COVID was there. You have to let it play out, right? Look at your own world, like look at your own community and how you can be to make sure that you're good and yourself. I always say put the oxygen mask on first, and I think we got to be there again. What's sad for me in all this is we just did this 5 years ago. So like we've had one kind of hit after another, and this is like, again, bringing back the episodes and talking about Beyond the Mortgage is about like talking about recalibrate with your money, how to recalibrate your financing and your mindset given like such heavy news, like for all of us, right? How do you do that? Like, and let's talk about even yourself, like looking at everything. You're so entrenched in the understanding and dynamics of the economy and the political system. Someone like yourself that studies it. The difference is I can double in and out, right? I can pull myself in and out and still deal with, when we're dealing with clients and moving the needle on my business and whatever business people have, but in it all the time because that is what you've built yourself around or your passions. How do you pull yourself out to say, okay, I need to put my oxygen mask on first, right? For my own well-being.
If you speak about me personally,
Yes.
I anticipated this.
Really?
I was 80% cash in January and sort of anticipated all this crap was going to happen and have been very happy. I can smile at the cameras. I might be down 2% in all of this. And equally, I made sure that my debt load was a lot lower, sold my house, mortgage free. That was just a personal thing. So that isn't me trying to pat myself on the back. It is just, in fact, it was anticipating it and just saying I didn't want to put myself in a position of having to worry. So people pay me to help them understand what to worry about.
Yeah.
I simplified my life. I don't have leases on cars. I buy cash. I have two 2011 cars and one 2017 and paid for. They do as much. I don't understand why people lease cars to put themselves in a position of not being able to have the financial flexibility of doing things down the road, like buying a house. I mean, you know the math. What would payment do in terms of your buying potential? I would assume it's about $100,000, 150, maybe $200,000 worth of buying power.
It reduces it significantly
for something that depreciates.
Yeah.
And truth be told, after what Trump and done, used car in the country might be the only thing that's gone up in value.
Probably
it's an asset class that's gone up. I'm sitting there going, it's pretty darn incredible. So I have to say that I'm very fortunate. It's a matter of living between your means. That said, I'm also the luck that I had of being born when I was doesn't mean that, I can say, oh yeah, it was all me. Timing. It's the lucky club, as they say. It's like I was born at a certain time. That's why I feel so strongly about, helping people like my kid, your kid, future generations, because it's not like, there shouldn't have been an expectation. I certainly didn't have when I was a kid. My parents were poor. Mm-hmm. Dad died intestate. There was nothing. Life is my skin. I didn't inherit a damn thing.
Yeah.
And that kind of hard scrabble stuff makes you say, you have every dollar. And, that's ingrained in me, and I've ingrained in my kid. Going to be quite fine, relatively speaking. It's an honor. But it is a balance of being worried of being without money that put me where I am. And it's a consequence of being lucky at that particular time. I do not see how the heck homes can double in value in the next, 12 years the way they did in the previous 12, 2 or 3 years ago. But slow and steady does. One of the things that I learned very early on was from a guy named Seymour Schulich. School of Business. A book called Get Smarter. I read it, 20 some odd years ago. And it was the one thing that stuck with me, that cash loses 90% of its value every 30 years. That's just inflation. That's 4% inflation. Once I understood that, and they said commodities and real estate are where you should put your money, park it, do whatever you can in those two things. Sensible real estate, obviously, because cash is worthless after a while. It's a reason that a house that has no business being worth $1 million was only $100 and some odd thousand 30 years ago. Just a natural devaluation of currency and of what it can buy. If you buy something now, make sure you want to keep it for 10 years. Don't buy a damn thing unless you're going to keep it for 10 years. That's the first lesson I would,
That's a good
just
one. Yeah.
just don't. Don't. You think, oh my God, and then move up to another one. Go for the bigger one and stay in it for 10 years and you'll be fine. Everything will balance out in the end.
And real estate's a long game.
It's a long game.
It's never been supposed to be
But
one, right?
everyone's treating it like meme stocks for those years.
I know.
It's like it's crap. It's not supposed to for crying out loud. You lose 8% of the value of this. You buy the thing. In land transfer taxes and the commission of costing for it to be sold, you got to pay someone 4 to 5% to sell it. All the costs and run-ups, just moving into the place, you're down 8% of whatever you paid for it day one. Forget about depreciation on a car, which is a depreciating asset. You're down 8% to begin with. You're only going to get those 2 years back by staying the 2 years. So that's the thing that most people, frankly, don't really need to. That's the kind of thing when we talk about, financial literacy and making sure people do the right thing. Times like this, that should be taught. The unfortunate thing about COVID, everyone kept rates at 0.25 forever. And everyone thought, oh, I'm going to buy, an $850,000 condo with 10% down. It'll be $1.2 million in a little while, and I'll triple my down payment.
The problem is we had it over 18 months of this hockey stick on values, and everybody thinks that's the everyday norm. And even still, even in the market today, speaking to realtors and talking to clients who are looking to sell their detached home, they're like, well, my value should be here at this point. Well, we're not in that world. You take that out of the equation, and values are usually going up 3 or 4%, which is still higher if you look at it than all the G7 countries. We've had the highest impact of values increase on real estate. People think that it's a cash machine to be able to, build a life around, and should be looking at wealth creator for them in retirement as opposed to continuously pulling out for investments. And I'm not to say we've done that for clients, but there's got to be enough making sure that people have strategies in place of money reserve. What is the fallback? These investments should be long? Well, they shouldn't be just short stints. And I think it's interesting because I've had come to us brokerage that didn't get financing with us, but are coming for help like SOS because they were new to the country a few years ago, got an owner-occupied property, built 2 investment properties, and all of them had 5% down. I still, again, how was that even possible when you're buying them in different provinces and then limited income coming in? And you're at a loss, rental income coming in. That's not a way to build wealth responsibly in any country. And is it misdirected guidance from the professionals they were dealing with? But also, to your point, is it the lack of that financial literacy education piece? And then in times of this, where in these economic imbalances and crisis situations, it even hurts people more. Looking at the housing industry, and you and I've depth many times about what's going on, now being hit with tariffs and the economic impact on that, where do you see the housing market in Canada?
It's such a broad
country. I know, it's a broad
okay,
question, right?
Let's do what we were talking about before. Let's make it local. If you could tell me an area, I could give you a better idea. Because if I say Canada, just the law of averages, the raw number might go up a touch, but because Toronto has gone from 1 million to 2 million, it's going to be because everything is just sort of steadily gone up. So give me a location and I'll give you a better idea.
I don't even know if it's about location. It's just about, listen, we've got a supply issue. Yeah. I mean, we all know that. Both the parties are saying with the election, which I know we'll get into, are talking about initiatives to build low-income and support housing, but not about actually building homes for people to buy in that middle class, right? Like this is where we service with our businesses,
Yeah.
right? So initiative, and where's the future of the middle class people to buy a home?
If one assumes that people just want a detached house, you got to incent developers to do it. But that might be a little too costly at this point. I mean, with development charges and everything else, property taxes where they are, having myself from a detached home to a condominium, I could tell you it's a completely different thing, but costs are lower. Costs less to build, costs less to maintain, relatively speaking, as long as everyone's on the same ship. I think the mindset probably is that we got to ask the kids what they want. I don't think, I look at my kid, he doesn't want to have a detached home that, it involves. Perhaps people who are coming here with, and they have multi-generational, that's where a detached house is. I think the mindset's going to be changing and going from, the idea of having the detached house with the big, the back and everything else to at least townhouses and, low-rise condominiums or, some sort of structure like that. In terms of the existing market, there's no reason for it to go down much further. Although I am worried about where appraisal, this is a different discussion because I have a question for you about this. It's all a mugs game. If you keep interest rates at 3.5% for a long period of time, prices will go up. If you have spikes where it goes 5 and 6%, like it did before with 1 and 2s, it's again cyclical. But as cash loses 90% of its value every 30 years. And as long as that happens, real estate should go up 3 to 4% as long as you have a wide enough window forever, because that's just the nature of money.
Do you think we'll ever catch up on the supply issue in housing?
Yes, because I think demand is going to diminish. I think that's really comes down to, if you have an influx of migration, if you have all of a sudden 3.5 kids as opposed to 1.8 or whatever it is right now, you won't have to worry as much about supply. And people are living together in more interesting ways now. The housing that I would probably focus on is anticipating what the future will be. You have people who are widowed or people who just simply want to live alone because they want to live with anybody else. That stock exists. It just happens to be all in the investor class now. That's changing pretty soon. So all of a sudden that supply is going to be freed up. All of the little one-bedroom condos that you see in the center of Toronto, and it's a market that I'm intimately familiar with. Those places that were asking $1,000 a foot or $1,200 a foot are now $800, $850. And certainly 20 and 30-year-old condos are going to be viable things. Now everyone's want bright, shiny, and new in much the same way they want bright, shiny, and new cars. The kids want to be around life. They want to be in close proximity to life. They want to know that, oh my gosh, this neighborhood in North York is a lot cheaper to live in than central Toronto because I can go out and get a great ramen for $12 instead of paying $25 downtown. That's the kind of thing that'll migrate people. There has to be life. There has to be a reason to be there. You don't have to worry as much about the commute anymore. So that stock actually exists. And I think more people will simply be renting because they're going to look at the costs of homes. And I'm sorry, it's not meant to be a dissuading thing for people. I think if you're an investor, the metrics are going to make a lot more sense because they do now. If you 20 times annual rent, it's a fair purchase. That's the way I look at it. If it's $2,000, it should be worth $480. It shouldn't be worth $750. And that's the mistake that kind of thing, you're going to get that balance. Will supply increase? Incrementally. I don't think the federal government should be in the business of, it should backstop, but it should backstop locally. It should backstop provinces. Cities should be burdened people with obscene development charges, which aren't even for that development or that area, that they're just really to put into general coffers and then spent on whatever whims there are. Costs need to be reduced at all levels. Supply tends to find a way of when demand dissipates. I don't see demand coming up anytime in the near future.
I think to your point about interest rates, I've always said this, interest rates drive the market. We know unemployment, you're right, unemployment. Given that we're in a downward cycle, which is a relief for a lot of Canadian homeowners and potential homeowners, do you think this downward cycle is something that, and again, this isn't about forecasting because I know everybody says it's too hard, and it is. Any senior economists out there won't even touch that right now in terms of that conversation. But do you feel, given, the education and the history of what we've seen in these type of, and again, a little bit different, but we've been through tariffs like in the whatnot, do you see that, you think interest rate, this cycle will continue to go downward for a longer period of time? And then will that gain maybe take up housing activity because of that? Or is unemployment going to be such a big factor? Because we have to remember, you're right, there's a blanket effect on tariffs, but there are businesses, if we end thriving in a lot of areas, we could actually start building up a lot of demand on certain sectors, right?
Variable rates, as you know, are predicated on the prime rate. The policy rate is predicated on data.
Mm-hmm.
That's usually too old, it's stale, it's constantly revised.
Yeah.
The data says right now that you had inflation last month because you had the GST holiday taken away and things went up. Okay, so that means you can't really lower rates too much because the data says the data is going to show that the cost of gas has gone down precipitously this month, which means that inflation is probably a little lower next month. It depends on what Macklem and Rogers, Carolyn Rogers, the deputy governor, who's a very, very strong internal proponent of keeping rates high and keeping people from, home ownership in a lot of ways. She's known as this. It depends on influences backstage. I don't think they're going to go down as quickly as people might hope, but I don't think they're going to go up anytime soon.
Mm-hmm.
And that's really the thing. Even inflation somehow spikes because of tariffs and how they affect pricing and everything else. That's more of an American phenomenon, and I don't think we're lockstep the Fed rate anymore. As for 5 years, it comes down to yields. It comes down to what, if every government in the world is all of a sudden issuing debt because they make up for shortfalls because of this tariff crap. I don't know why interest rates on long stuff would go down. It doesn't make any sense to me. That only happens if everything goes to crap.
Mm-hmm.
Now, things need to be spent. Money needs to be spent, which means that interest rates should, at least on the yield side, go up a bit.
Mm-hmm.
In truth, I would probably just go for a 3-year at this point. 5, because at least you ride out the time with Trump. Because unlike COVID, where you knew vaccines were going to fix it, this is a virus that keeps deciding how to influence everything everywhere for the next 3.5 years. It's not as simple, there's an end game. It's, the thing about COVID was a year and a half. It might look like when living it was an infernally long time. But relatively speaking, we're going to live with this for the next 3.5 years.
Mm-hmm.
So what do interest rates do? It is a mug's game. It's, Galbraith said, economists are in business because they couldn't be good, good fortune. That's it. We're not going to have ups and downs the last 4.5 years.
Which is good news.
It is good news, but it's for the wrong reasons. It'll go down a bit, I think. Again, it's what you as mortgage professionals can advise. It is a moment in time. And the thing that, thinking about 10 years down the road when you're making a purchase or keeping something instead of 1 month road, you're not going to second guess why you did something 3 months ago if all of a sudden the rates change. It's the best information at hand at that particular moment. So trying to predict something that is completely unpredictable, it's not worth it. It's too much. It's too much anguish.
It's just deal in the
Control
moment
you
of what
can
you have.
control.
Exactly.
Don't overextend yourself. That's the advice that everyone should sort of be hearing right now. Don't over.
To your point about that, because with this, like we were in COVID, and then given where we are with tariffs, talking about money, it keeps on back to that same conversation of extending and making sure that you are financially responsible for your well-being and yourself, because no one else is going to do it. And if you're not, there's lessons in it, right? So there's, it's funny. Someone said to me the other day, there's always ways to make $1 million. It's just putting your, but even in different economic situations, when you find your purpose and your passion, it's amazing what the universe can bring to you. And I'm a big, big advocate for that. Doesn't matter, turn the noise and just deal with what you can do to make it one person. And I really feel like in times like this, you can still make $1 million if you want, right? It's what you put your mind to, but make sure this time around when you're making that $1 million, you take the tools you've learned and really sit down and make sure that you have that money work for you. And there was a saying that I read the other day about that, is that making sure that money works for you, you don't work for money, so that it affects generations to come.
Agreed.
Pretty profound.
It is. The other thing that I heard that about money that I've, taken to heart is people work because they want to or they need to. That's it.
Yeah.
And I'm doing the former because I got sick of doing the latter. That's it.
Yeah.
That's pretty much it. No one who needs to work really wants to work. And you try to put yourself into a position of never needing to work, that you only want to work. And that comes from prudent fiscal management over time on top of luck at times. But you talk about $1 million. Don't need $1 million if you're living in Red Deer. 300,000 will do you quite nicely there. Maybe 400. It's all relative. It's also making sure that you don't just look around and say, I want that, I want this, I want whatever. And it's perhaps not going on that $10,000 trip to Europe when it's maybe not the right time. It's all of those things, and then there's a time for it. It's not putting yourself in those situations. And I strongly believe in real estate in the long term, as long as you've got a long enough horizon, because you get to live in the thing that, is your savings account. And maybe don't take the 35 or 40 year in. This is one of those things. And go where the money is.
Thank you so much. It's been so engaging. You've provided so many great perspectives and knowledge to the listeners. I, again, admire your journey so much and appreciate our friendship immensely. Do you have any final words that you would like to say to the listeners?
Oh, Tracy, you got me preaching all bloody session. I didn't want to do that. I wanted to learn as well. I mean, I just... find your happy place. Just find your happy place. Know you're here. You're above ground. You're take a breath outside. Just and this isn't me trying. Believe me, I've been in bad places before too, but it's all relative. You have a tight group of people and you turn out the noise and you move on to the next day and find the things you love. You'll be okay.
I love it. Thank you so much.
Thank you.
So for all the listeners, again, thank you for listening to another episode of Beyond the Mortgage. Just so impactful today. I'm kind of sitting back and reflecting. And to what JP said, take time for yourself. Really know that no matter what circumstance you can go through, you can recalibrate and be able to come out a lot stronger. And make sure you put your oxygen mask on for you, because you matter the most. So for all the listeners, please make sure that you subscribe. Stay tuned for another episode of Beyond the Mortgage. And I'm so grateful to have all of you listen today.